Hello, this is Patty Hines, Industry Solutions Director of Financial Services at MuleSoft. Welcome to today's webinar, Unlocking Data to Transform Financial Services. Guy Murphy, Principal Solutions Consultant, and myself will be providing you with an overview of some of the problems that financial services are facing in managing data and transforming their businesses. So let me start by telling you a little bit about MuleSoft and financial services. Financial services and insurance is a very important industry segment for us here at MuleSoft. We have an extensive depth of market leadership in the segment, dedicated project, engineering, and services folks, as well as teams really focused on meeting the important requirements of this segment. We've had a lot of experience working with customers across commercial banking, insurance, investments, cards, and payments. So we have a chance to talk to these clients quite a bit about the problems that they're experiencing. We've been working with these clients to identify a series of challenges and business imperatives across the industry. And today we're talking about data management. So we've already recorded one webinar, Legacy Modernization, and encourage you to listen to that one. And then next month we'll be recording Digital Transformation. So financial institutions have a unique integration landscape. I know we talk a lot about, these days you're hearing about connecting to the cloud. Well, financial services have been connecting to external parties for years and years. Of course, they have their customers. They have providers of data. They also have hosted providers. They've been using hosted core banking systems, for instance, for many, many years, or bill pay systems. And then you do have some new cloud providers coming on the scene, as well as channels. And channels are certainly one of the big issues. So banks interact with their clients through the phone, through the branch, on the internet, on the ATM, and all of these different constituencies need to be connected. And they're connecting to legacy applications that have been in place for many, many years, maybe running on mainframes. They're working with custom applications, and there's also many, many departmental databases and files, and those are the kinds of problems that we're looking at today. Because financial institutions have to integrate their applications, their data, and their devices around this infrastructure, and it's very, very difficult. So we're going to start by talking about data management. What does that mean? We're talking about things like the ever-evolving regulatory compliance landscape, deepening customer relationship with a 360-degree view, and improving data-driven decision-making, what many people are calling big data. But we think it's more important than even that. So let's take a first step at regulatory compliance. The banks and insurance companies are just getting bombarded worldwide with a changing regulatory compliance landscape. There's many things that they've already tackled, things like SEPA for payments in Europe, HIPAA for healthcare privacy in the United States, Sarbanes-Oxley, European data privacy rules, and there's many more things coming. So it's just a never-ending struggle. And what's the bank to do? They have to be ready and willing and able to address these regulations or risk hefty fines and unwelcome publicity when problems occur. And as an adjunct to many of these regulations, they actually start talking about technology formats, file formats. For instance, the United States government requires that securities filing be done in XBRL format. SEPA requires that payments be made in ISO 222 XML. And then there's many, many, many other standards. Some of these are formatting standards, some are communication standards. But it's just a really dizzying world. And if you're a global provider, you really have to be aware of these standards and be ready and available to meet them. And the big challenge is that many of the legacy systems only speak one language. So for instance, in the U.S., checking account systems speak BAI. It's a very arcane way that banks are able to send account-based information to their corporate customers. And it's pretty difficult to change these legacy systems to fit. So the next piece we're talking about today is a customer 360 view. Why are we still talking about this? Since I've been in banking, we've been looking to have a single view of the customer, which is really, really critical. It could be just you and your wife. It could be your large corporation with all of your subsidiaries. You may be a private banking customer with extensive holdings, and you really want your bank to know who you are. And it's not just important for serving customers across all their channels. Regulators need to know this as well. So this was a big problem in the financial crisis of 2008, that banks just did not know how they were exposed to various corporate entities. And then you need that data for decisioning. And of course, security management and fraud, which is very, very critical these days. Really understanding who that customer is on the other side of the transaction. So the next piece of it, of course, is as you're acquiring this data for regulatory compliance or maybe for 360 views, you're starting to acquire the makings of a big data database. So I prefer to call this data-driven decision making. So it's all about not just having lots of data in many different places, but it's what are you going to use that data for? How is that going to grow your business? How are you going to serve your customers with that data? So banks have been doing this for a long time. There are companies out there called Hard Hanks. We used to send a monthly batch file of all of our customer views to them, and they're the ones that would create a 360 customer view. And then, of course, it's critical to send customer data to the credit unions. And then you've got actuaries in the back office of insurance companies. So we have been doing this for a while, but it was all in silos. It was either offshore in a Hard Hanks database, it was back in your insurance underwriting, or maybe it was in your credit bureau. So what's really changing now is being able to gather all that data together, being able to aggregate it, and really being able to use it to impact your business. So whether you're in insurance, you're in securities, or you're in banking, it's just really, really critical to connect all those pieces of data together to really have the power to change your business. So we here at MuleSoft really feel like there's a different way of looking at this problem and a different way of managing data and integrating all of that data for your use in your organization. So next, my colleague Guy Murphy is going to talk about how integration can help financial institutions retire their technical debt. Guy?
Hi. So we really want to start driving into how the modern financial services is facing the modern challenge while having to coexist with their legacy and their current core systems, while trying to support this shift towards unlocking data, enabling data, and supporting multiple data channels. I personally love this quote from the CTO of Union Bank, where it's a quite open conversation in our customer base and many other organizations that we work with today, that the traditional IT project style and development cycles are no longer adequate to maintain and support the modern requirements of the business. So nobody asked for the current environment where the business is becoming frustrated with the inability to deliver new services and capability and unlock the data from the core high-value systems out into the new class of consumer. And it really started with the traditional life cycle and system of record within the banking and financial institutions, the Oracles, the SAP, the bespoke, the specialist manufacturers and suppliers. Also, in certain marketplaces, and we touched upon this earlier, we're starting to see the beginnings of cloud platforms being used within finance services, predominantly within the internal use cases of employee and management. And these have to be considered to be core systems today, not just systems of innovation. Traditional data patterns were mainly focused on data sync. In many organizations, this is file and batch-based, but things did move on, and many organizations looked at orchestrating and developing point-to-point architectures within an orchestrated but hard-coded manner within vertical projects. An example of this is what we saw with many employee-style services within large enterprises, which were associated and managed within, say, the example of an expenses strategy across a global bank, where the flexibility was useful within one innovation lifecycle, but moving forward, it became hamstrung and inflexible over time. Other organizations looked at adapting SOA and the use of ESBs to try and wrap the legacy capability and expose that out as what was predominantly web services in the first generation of this. This again had mixed results in many different organizations, and part of this result was less to do with the technology and more to do with governance, the life cycle, and in large enterprises a lot of ESBs, though they started out as layers of innovation, quickly became bound to the system of record, so the core systems. And therefore there was great frustration, especially in this new world of rapid development with consumers, with partners and with employees. So then what we saw was, even though there was different styles and governance and technology that could be applied, point-to-point was still rolled out, often under the banner of, we need to just get it out the door, we need to innovate. We haven't got time for the slower integrations life cycles and for the core center of excellence teams to catch up with what we need to deliver. This is unsustainable in our views. So, data access and integration, what is really needed to support the new strategies? Firstly, some basic housekeeping. We need to reduce the point-to-point legacy data patterns, be it legacy file architectures that have been evolved or even mutated over time, from being inter-core system to being used and supported for B2B, or in other cases, copy and clone to support innovation factors. Second access is really starting to think about data-driven exposure and data-driven exposure for consumption. Understanding who and why wants to consume it, what the right format is for them, and then understand how you're going to map your current systems, manage that integration, keep them safe, keep them protective, and yet service properly the new types of consumption pattern. And actually understand beyond that, what are your different classes of data channel? Be this the protocol level, be this at the most efficient way to deliver, audit, prioritize, and even manage and measure. Is it traditional web services from an SOA strategy? Is it more lightweight RESTful interfaces for mobile and cloud consumption? Are you considering microservices to slowly break up your landscape from the point of view of channel management and exposure into smaller bite-sized chunks of capability that you can then layer and assemble into larger grain capabilities? These are different styles of patterns that we are seeing being rolled out across various industries, and especially within financial services due to its data richness and data-centric capabilities for new services. There's a lot of conversations in the wider integration and data management marketplace about APIs. So, where do we see APIs really being considered within financial services? First one is using them as part of a two-step strategy to evolve and expose monolithic systems that you're not going to consider a fundamental replatform, but to generate and design business and data services out in a multi-layered approach so that you can again maintain the right levels of control and governance while supporting innovation at the higher levels of construct. To actually be able to support an accelerated exposure and development of new channels, the CMO may well be looking at new experimental services that they may want to be able to design, define and develop in 100 days. And if the conversation is then, but it's going to take us 100 days just to expose out a simple data set, that's no longer acceptable. And especially when you start crossing the different layers of development skills, technology skills and development life cycles, exposing out highly complex legacy data sets and interfaces to be consumed by modern lightweight developers, maybe using lightweight UI technologies such as Drupal or mobile development teams, is not working and does not work. And we've seen the need to use APIs as an acceleration and encapsulation layer to allow the two different generations of technologies to work seamlessly together. This obviously rolls on to allowing an enhancement to the back office and mid office platforms fundamentally without having to go through core redevelopment. Also, even though we wish to support fundamental innovation lifecycle, data exposure and data management in this layer, we also want to embed standard patterns. What is the right way to expose data? What is the right way to manage it, log it, audit it, and understand and measure who is consuming it, especially as more and more banks are launching true multi-channel touchpoint services. And we have to live in the real world. We have to allow capacity management and prioritization of service, of data, and of capability, not just to support these new capabilities and services, but to also protect the current systems so that there can be no negative impact while launching this capability. And we see APIs, API management, and layered architectures associated with this as a fundamental best practice. So, how are we going to accelerate data and integration projects? Services and APIs, encapsulation of service, separation of service. The ability to support modern development patterns to both produce, aggregate, and consume these patterns. Be able to increase the adoption of the service across projects and platforms with mixed skills, different generations of technologies, and very different governance life cycles and risk priorities. Be able to reduce the dependency on the legacy skill sets throughout an innovation cycle, and allow an organization to enable the evolution from file to live of access to key high-value data. So Paddy's going to take you in and do an example of one of the core capabilities within our portfolio of financial services-based connectivity.
Thank you, Guy. When we talk about integration being able to speed deployment and speed time to market, one of the things that can really make a difference are pre-built connectors and templates. And this is an example of a financial messaging template and connector that we're working on here at MuleSoft with a partner, C24. So C24 is a leading provider of this type of messaging set. And what they've done is they've embedded in their product all of the Swift libraries, Fix, local payment formats. And what it enables the developer to do is quickly be able to understand the format of the Swift message he's using and to quickly map that. So saving all of that knowledge, he does not have to understand the bits and bytes of that message. He's able to use this tool to speed his development up. And this is what it looks like when you get to the data mapping component. So on one side, you would have your source, and the other your target. And the tool actually tries to map as many of those fields as it possibly can for you. So name and address, balance, currency, transaction date. And then the developer can go in and repair those as they'd like. And the other thing that they can do is parse, validate, transform, and even add data elements with enrichment. So many different capabilities here to really make that a much quicker exercise to get that template up and running.
So that is an aspect of an industry focus within our wider architectural concept, the Anypoint platform. This allows the generation, integration, and exposure of data and process up to support mobile devices, external parties, and web applications both thick and thin. How does it do this? Through the use of connectors and support for standards for data access, orchestration, transformation, mediation, and presentation. Here we allow the connectivity to your legacy, enrichment, lifecycle management, and then exposure into modern technologies such as web services, REST, and cloud-based API patterns. From the point of view of architectural principles and layering, this allows the decoupler of the applications and data from either legacy or SaaS platforms, your M2M, A2A layers, and the orchestration across that so that you can then build out an unlock strategy at the mid-tier both functional and data. You may be wishing to think about this being the beginnings of a layered API strategy, so that you then can have orchestration, integration into your core systems, and then at the highest level, support the digital transformation, so that the very fast-moving, high-value concepts of omni-channel, rapid app and external APIs, mobile services, extended customer provider connectivity can then be considered as a lean layer on top of these two concepts. How do we support this? The Anypoint platform is a unique offering that allows a complete life cycle of capability to support this. So we have the ability to develop and design in Anypoint Studio. We can generate reusable templates and industry content. We have the ability to run on-premise in the traditional data center, within cloud architectures, and we have Cloud Hub as our core iPaaS. All of the content developed in Studio and templates can be deployed into either architecture. We've already touched upon the concept of connectors to accelerate integration, to encapsulate. We have today over 120 connectors, technology, cloud services, traditional on-premise, and you saw our financial services connector previously. We have rich management capability, and from the point of view of embedded a API, or in some cases an API first strategy, the ability to deploy policies, throttling, SLAs, white label, black label patterns, but not only do the governance, but allow a fundamentally different life cycle by supporting a design first principle and design for consumption through the API designer, exposure and content, and the ability to understand the success, comments, and feedback via each portal and the API portal. And then linking to our enterprise management capability is our Anypoint Analytics. This is unique in being a capability that Gartner has been able to put us into the top quadrants for on-premise integration, hybrid integration, and API management. And we think this combination of combining the best principles and practice of API integration and being able to support hybrid patterns, it can support any modern financial institute as they evolve out their new emerging data-driven strategies.
Thank you so much, Guy, for helping us to understand some of the trends going on with integration and how financial institutions can overcome some of the data management challenges. I wanted to next talk about an example of one of the clients that we're working with today, a U.S.-based life insurer. Now, life insurance, in many cases, they're really working with very old legacy technology. And it's been very, very difficult because, again, as we talked about earlier, they just have layered on batch point-to-point integration over time, and they end up having duplicate data across the organization. When they push data out to the partners, it's not necessarily the most accurate. There's no single source of truth. So without a data management strategy, the firm was really struggling to make sure that all of the data was validated and available throughout the insurance lifecycle. So the firm chose MuleSoft Anypoint platform to eliminate that batch point-to-point integration in an event-driven model with web services. So somewhat of a traditional integration approach. But then they used an open source NoSQL database, Cassandra, to start to implement some of these agile technologies, these next generation technologies to help them with their data management issues. So it really helped them to switch from a legacy batch mode, very slow mode, to a low latency data ingestion model, speeding up that agility. They would have the data quickly and where they need to have it. So now what they're experiencing is that as an application is going through the underwriting process, the support staff knows that it's the single source of data about that client. When they share data with providers that are working with that policy, they know that that's also the single source of truth. And as a side benefit, it's really sped up the development process in terms of quality. So much less testing is required as they implement new systems, and they know that is a high-quality, high-velocity experience for them. So this is a very simplified rendition of what they're doing, where they were able to expose data, expose features and functions through web services and internal APIs, both to their core systems as well as their providers. This is just one example of how MuleSoft helps clients in the financial services world. We have lots of examples of customers launching initiatives faster, speeding deployment, speeding productivity, improving the developer experience, and improving the client experience. Please contact us. We would love to tell you more about how we can help you to become a connected financial institution. Thank you.